What should I know about Veritasium?
It was under the blood moon. I felt my heart come. I held you in this strange light, a place where
So
shadows
basically, I'm
run.
looking to tie the entire world to Veritasium.
You mentioned the rent seekers here, the guys that are getting paid fees in the middle to represent ETFs, do services in the middle. I believe you created Veritasium to cut the middleman out and help people transact peer to peer, which may help preserve more wealth for folks who choose to use the Veritasium platform in the future when it's up and going. I understand ex-US you might be more successful than here in the US because of the regulatory issues that you've run into. Alicia Julian asks if your patents granted eventually give you access to 70% of the global markets, how would the Veritasium IP you own position people in Colombia and South America?
Okay. Well, I can't guarantee, but I don't think it's going to be if they're granted. I believe they will be granted. They're starting to grant. I have Japan. I'm fighting hard. The other ones, we'll see. But I am pretty confident that they will be granted. Maybe not all of them, but I'm confident. Um, as for ex-US, I've decided to play in the IP space for a while now. It's safer for me. Okay. Who knows? Maybe a patent might become a security because damn it, everything else is, right? But until my ideas and patents and intellectual property becomes a security, it's safer. I don't have regulators, doing bad things to me. Um, not trying to disparage regulators. Okay, you guys win, so don't want any problems with you, which is why I want to stay
Well,
out of that space.
we need regulators. We just need the regulators to be fair, in my opinion.
Right.
Let's treat
Okay. And
everybody the same.
I'm talking about the regulators who are not fair. Okay.
Okay. Okay. Right.
Regulation is a good thing, and I don't think, except for the super libertarian early crypto guys, nobody's anti or con regulation. Nobody's against regulation. I mean, against persecution or picking winners and losers arbitrarily, through things other than meritorious effort and success. But that's not regulation. But some of them, in my opinion, are labeled as regulators. So let me stop because my feelings are going to get going and I'm going to say something I shouldn't say.
Sure.
So let's push that back to the side. And I don't feel we have to go ex-US. I feel we could deal in the US from an IP perspective. And I am quite confident that I could deal with those who are licensed brokers, exchangers, broker dealers, investment banks, etc. I believe many of them should deal with me, and I think many of them are going to have to deal with me. Hopefully through partnerships and friendly services, but one way or the other, I feel they're going to have to deal because the law is the law. Okay. And what was the last question? There was a 3-part question. What was the last part?
Let's see, I think it was talking about South America. I think, you have fans around the world. I think a lot of people are following your IP. And I think that Alicia was wondering, is she going to be able to participate as a citizen of Colombia, South America? So she was interested in your plans for that jurisdiction.
Okay, well, I want to go into all jurisdictions from my perspective, and this is my perspective. The technology does not recognize geographic borders. Okay.
Okay.
You do a transaction through, say, Uniswap. Okay. Do you really know where those tokens came from? Did they come from South America, Central America, North America? Equatorial Guinea? Did they go through Sub-Saharan Africa? Central Asia, North, South, Southeast Asia, anywhere in Europe, South, Central, Northwest? You have no idea, right?
Mm-hmm.
You're trading value. You're not trading a geographic location or a geopolitical idea. Okay. Now, there are a lot of nations who don't want to do business that way, and I will honor them. But as far as the law permits and the technology allows, I want to include everybody. The entire premise of Veritasium was to make each and every person self-sovereign, to be in control of their own assets. Okay? Nothing to do with breaking the law at all. It's not even part of the conversation. For you to be in control of your assets versus someone else to be in control of it, which means you're responsible for your wealth, right? For your gains, for your income, but you're also responsible for your losses and for your poverty and for your lack of income. You're responsible for your own privacy and identity. You're also responsible for your own security. So if you get hacked, you got hacked. It's nobody else's fault. If you succeed, it's through your own efforts. Nobody else should take the credit.
Understood. Understood. Great answer. From Coco, MISADA, it's appropriate, financially speaking, to separate the term money from currency when we want to split good money or sound money from bad money. And let me restate that. Is it appropriate, financially speaking, to separate the term money from currency?
Okay. I think there's not much of a difference, but is Coco online now? Yes, he is here. Yeah, let's have Coco come up. We can have a conversation with him. Coco, you want to unmute your mic and have a discussion on it?
Yes, I will try. I've just shut down my loudspeaker.
Okay. That's why I like this format, because we can actually have a conversation versus me sitting on a soapbox.
Great format.
Chattering away.
Okay,
Yes.
I can hear you.
Yes.
Can you hear me?
Put your mouth a little closer to your mic, and you can ask me the question directly.
I will try. I got a very bad connection, sorry.
No problem. I hear you just fine.
Okay, great. So the question is I had sometimes issue with English because I'm a French-speaking person to dissociate the idea of sound money and bad money due to language issue, but also because I have different, what should I say, teacher like you, Robert Kiyosaki being one of them, speaking about money, good money, and bad money, of course. And sometimes with the translation in French, you never use money for something that is bad money. You say money for currencies. So that's the issue I had, because the term were mixed between the two language, and I wanted to clarify that idea, if it was convenient to sort good money and bad money this way or not.
So is the euro considered good money or bad money in France from your perspective?
Euro is crap, just like the dollar or the Swiss franc. It's a currency in my opinion.
Okay, give me an example of good money, and if that good money is a currency.
Okay, good money, in my opinion, could be silver, could be Bitcoin, could be Ethereum, could be something that is hard, and you can't inflate the supply like mad, like Q is doing or LTRO is doing with the euro.
Okay, so I understand. So I think of money and currency to be pretty much the same thing. Okay, depending on how you define good money or good currency and bad currency, the US dollar could be a good currency, but it's a good currency because we have a military that will blow you up if you say it's a bad currency. That doesn't mean it's necessarily economically better, but it is backed by a significant force. A lot of people, I think, confuse currencies or money and capital, investment capital. Okay, so I can be worth $100 billion, right? I have a lot of capital. Okay, but my capital is tied up in productive assets, real estate, stocks, bonds, crypto, commodities, intellectual property, private equity, etc. Okay, that's productive capital. A lot of people really conflate and confuse capital and money, or capital and currency, and it's understandable. A, because you went through the capitalistic school system, which doesn't teach capitalism, but we broached that discussion a little earlier. I have videos on that because I used to teach a lot. Number two, the general culture refers to money as wealth. Okay, they say, how much money does he have? How much money do you make? What's your income? Those who have large amounts of capital, okay, don't talk in those terms. They don't measure each other's wealth by income. Income, right, or money is, and I said this before, it's the least respected capital in this country and in much of Europe. It's taxed at the highest rate and it's given the lowest return. So why would anybody keep it? So someone who's worth, say, $10 billion does not have $10 billion sitting in a bank account, right? They have $9.89 billion in productive assets. They may have a few $1,000,000, like $10 million or so, if that much, maybe 2 or 3 million, or not even that much in savings accounts, short-term money market accounts, and money equivalents. So that's a accounting way, investment way of saying money or money-like instruments. We're talking basis points of their net worth. And the reason is the more money you have, the poorer you'll get over time, because that money, as you said, is debased. The ECB debases the euro. That's how they run their economy. The United States, the Federal Reserve, debases the US dollar. Okay, when they debase the dollar, they drive the dollar value down. They drive risky assets prices up, not value, but prices. So the more the dollars they print, the higher real estate goes. The more dollars they print, the higher stocks go. The more dollars they print, the higher bonds go. Okay, same thing with commodities. So if you rely on money as your source of savings, or your source of investment, or your source of compensation via income, you automatically get poorer as everybody else automatically gets richer. And that's simple math, and it's going to happen all day, every day. So if you think in terms of money and not capital, then you're going to fall down a slippery slope. Now, if we use something like gold and silver, okay, gold and silver is hard money. You're correct. But gold, silver, and Bitcoin all inflate. You know, gold comes from somewhere, and they dig it out of the ground. So every time you dig gold out of the ground, that's an inflation, okay? Because you've increased the amount of supply. Same thing with silver. Same thing with Bitcoin, okay? Every time, you know, a mining reward is given out, the Bitcoin amount is inflated, okay? Now, there's a cap at 21 million, but we're not there yet, so Bitcoin is still inflating. The difference is that inflation is measured, okay? It's mathematically calculated in terms of Bitcoin, so everybody knows what it is over time. There are no surprises. In terms of silver and gold, there are constraints in production. I'm not sure if those constraints can't be busted if put enough labor and tech in, but there's no incentive to do that because I think that would destroy the gold market and the silver market. So now we're back to the original point. So if those inflate, right, and their money, how do you differentiate money from currency? Because currency can have the exact same attributes, right? I differentiate that by having a category called capital. And capital encompasses all of that stuff. Productive capital excludes gold, silver, and currencies, okay? In my opinion, gold is to maintain purchasing power. So 1 ounce of gold, 1 ounce of gold buys a man's fine soup over the last, say, 1,000 years, okay? 1 gram of gold buys roughly 10 loaves of bread over the last couple of hundred years. And I think that's about right. How much is a gram of gold right now, roughly? A kilo is about 57, so a gram would be about $57, right? So roughly about 56 euros. Is that about right?
Yes.
Okay.
Something close to that.
Okay. Now, food is expensive as hell in New York. So if you go to Whole Foods, that is about, 5 loaves, 10 loaves of bread in New York. But in most other places, you don't pay as much for food as you do here. But if you look at the inflation rate and the price of these goods, a soup or gold or bread, and you go back over the past 100 years, you see gold has purchased about the same amount of that commodity, right? Decade after decade, year after year, and going back for quite some time, hundreds, if not thousands of years, okay? So gold is not an investment. Gold is a anchor for purchasing power. You don't buy gold to get rich. You buy gold to prevent yourself from going poor, okay? But you have to get wealthier, to get rich or wealthier, you need a productive asset, which gold is not, okay? You can make gold a productive asset by doing things like lending it out at a high interest rate, but now you have an income. That's one productive asset, and that would be a loan or a note or a debt, which is a fixed income or bond, fixed income market. And then I named the other risky assets as well. public stocks, private equity, public equity, bonds, commodities, crypto, etc. That's where your capital, your money needs to be. Your money needs to be in risky assets to keep pace with inflation and outperform and outrun taxes. Without that, you're either treading water, like with gold, or you're falling backwards with fiat currencies. Okay?
Okay, thank you.
Okay, over the past few years, Bitcoin has been the most productive asset class, beating out gold, equities, and land in terms of nominal growth. However, it is by far the smallest by market valuation. In your opinion, is Bitcoin, crypto, or crypto in general, at the beginning of a bull run that will eclipse these assets over the long term? I'm going to put a screen share of a graphic that shows the biggest assets by valuation. Real estate being the biggest, debt securities next, equities, global GDP, global M1, gold, the FANG stocks, and then crypto is a very, very small part of that.
Okay, so let's see if you can see the, oh, you found a radar. Okay, I can see that better now. Well,
So
to
right
begin
here
with,
in the far right lower corner is crypto. That's the
right.
crypto market.
Oh, that's the little red thing and orange thing.
The little
Wow.
maroon thing
Okay.
in the bottom right.
Yeah. Okay. So number one, you said Bitcoin was the most productive. Did you mean crypto or did you mean Bitcoin when you said it was the most
Well,
productive?
Bitcoin specifically is the most productive asset class, and but this chart actually includes all of crypto.
Okay. So I have to push back on that one because, in my opinion, and in my observation, arithmetically, Bitcoin is not the most productive asset. Well,
Okay.
Bitcoin is not an asset class. Bitcoin is an asset. So as an asset, Bitcoin is not productive. Ethereum is. Ethereum is multiples, magnitudes of more productivity than Bitcoin over various ways of measuring productivity. If you measure productivity by turnover or velocity of the token, Ethereum has Bitcoin whipped multiple times. If you do it in terms of adoption, retail adoption, small business adoption, Ethereum has Bitcoin whipped, several times over. If you do it measure it by enterprise adoption, Ethereum has Bitcoin whipped many times over. If you measure it by developer engagement, okay, Ethereum has Bitcoin whipped many times over. You do it by
You sound like an Ethereum maximalist.
Actually, I sound like somebody who looks at the numbers. Okay.
Granted.
None of this, yeah, none of this can be disputed, or you could dispute anything, but none of this could be factually disputed. Okay. What Bitcoin has over Ethereum, and if you listen to me over the Twitter spaces and everything, as I've said this before, but I have to repeat myself because not everybody knows the spiel. The only maximalist that I am is I'm a Reggie maximalist, and I'm a Middleton maximalist. I love my family to death. So much so I buy my daughter these wild, rampant puppies and cats, and they attack me as I do these live videos. But believing in Bitcoin or Ethereum or anything else in the cult status is outrageous. I mean, you really, really need something better to do with your life.
Right.
Ethereum has strong attributes, right? Bitcoin has strong attributes. Those attributes are diverging more and more, okay? You said most productive. Productivity is where Ethereum runs, roughshod over Bitcoin completely, and almost in any way, unless you measure productivity by media market share or mind share or hash power. There's no way in the world that Bitcoin compete with Ethereum. Where Bitcoin has Ethereum beat is hardcore security through hash power and mining. Okay, Bitcoin is just superior to Ethereum on that, and Ethereum is leaving the mining rates to go to proof of stake. I think it's delegated proof of stake. Time will tell on that. I'm not even bothered to opine. It's not as simple as many people believe, number one. And number two, it doesn't matter how complex or simple it is. Either it works or it doesn't, and only time and experience will tell. So let's not play games and guess some of us could peer into the future. Bitcoin also has an advantage in terms of mind share, market share, and investment adoption over Ethereum. Investment adoption is not necessarily a positive. You'll find that now that the Wall Street guys, and I had a couple of Wall Street guys on staff, right? You know, I'm talking veteran Wall Street guys, 40, 50 years on the street. Those guys get in, not that they're bad, you know, but they get in, they do their thing, and that thing is trading, spinning, going back and forth, right? They get paid, like traders get paid over moving money around, not over fundamental value. Okay.
Right.
They care less about fundamental value. That's not what they do. You know, race car drivers don't drive cabs because driving cabs around is not how they make money. They make their money by racing cars. So when they do that, the actions that they must take to make their money causes certain movements and activities. And those movements and activities are similar in all the assets that they trade. They pile into something. There's a big news event. There's a macro movement that causes an adverse movement somewhere else in the market. Okay. Their investment, their Bitcoin investment is still up 2 times. Okay. Something else in the market breaks. Let's say you have a significant equity break, right? Prices pop. They get a margin call. Bitcoin is up 50%. What do? You liquidate your Bitcoin position to cover your margin call somewhere else. Okay. So equities drop. Bitcoin is up. You liquidate the Bitcoin position. What happens to the Bitcoin price? It goes down because there's sell pressure. Now you have an asset that has been marketed and touted, and accurately so, depending on your time period. But through most of the time period, I used to say, I think I was the first one to say it because I was a financial guy in the group with mostly developers, that Bitcoin is almost negatively, but definitely uncorrelated to the popular asset classes. As more traders and professional investors came in with more capital, they've closed that correlation gap, and now Bitcoin has correlation with the S&P 500. Not because it's similar in any way, but the people are doing the same thing to Bitcoin. They're doing the S&P 500. So they have a margin call in equities. Bitcoin's up 20, 30%. They're selling that. You could take a profit and cover your margin call. Okay. But when you take your profit, you drive Bitcoin down, there's correlation there. Correlation that's not there fundamentally, but from a quantitative perspective, trading perspective, it's there. Fundamentals out the window. Okay. That's going to happen more and more. So everybody who wants to see these Bitcoin ETFs, particularly Bitcoin ETFs through futures, you're going to find that correlation is going to increase more and more and more. Okay. And futures, you know, not the unnecessary middleman that has been allowed when spot wasn't allowed, which makes it more dangerous in terms of volatility. It makes it more expensive and makes a significant tracking error. I gave you an example, 50% tracking errors. That's not even a tracking error. That's just different pricing. Okay.
Right.
But the reason why it's been approved, in my opinion, is because the SEC is going for power grab. You know, they want control. Okay. They don't have the control they want over Bitcoin. They have the control over futures ETF. That's just my speculative opinion. Okay.